Welcome to TradeTheMBI.com. This is John. This report is for the 15th of June. And, well, we had the brief little pop-up, created new highs, backfilling it again because simply we're just caught in that no man's zone weakness. I mean, even though we had the reset of the orange, very soft. It was just a really light press there. We did have the short-term buyers holding things up. All we've done is returned right back to the ABM values. It's just part of that continued consolidation. I think the market's absorbing the Fed's doublespeak. It's more incoherence. So you also had the headlines of Trump being investigated for obstruction of justice. That's not going to be pleasing to the overall market. And then, of course, you had the shooting for Congress. So there's a lot of resistance to positivity there, and that could lead for more weakness. And you can see the NQ just hovering around bottom. It's continued to drop in the shakeout. We haven't seen any improvement. You can see there's been clearly far less enthusiasm on the reset of orange here for the NQ. So big difference between the two, though it is starting to base turnaround. And if that steel dips back down again, you could end up with a move where the steel and the orange dip below. That would be the key for a turnaround at this particular point. Not there. The ABM green value at 57.79 there would be the turnaround point. Otherwise, it's just short. Euro not doing anything. No real surprise. You would think that higher rates in the U.S. would attract more euros to the dollar, but in this particular case, we can see that as the Fed has indicated with their balance sheet talk, they pretty much manipulate where things are going to go, and they've decided to maintain it. Massive spike here, TLT. It's been crazy good off that buy from the 120. It's still ridiculous. We had the brief little short period that reset the other day, and sure enough, Fed did exactly what was expected, though this has got to retrace itself completely with the positive extreme that's in place right there. And oil, this is an indication that we're not getting any traction in the economy, that while there's some fits and spurts, that without some broader stimuli, still problematic. And this oversupply not being sucked up, the only way it's going to get sucked up is through significant growth. And that becomes a telltale sign to us that there's still broad weakness out there. So don't fool yourself. We had a nice spike in gold, even though it was within its short signal, still there. I mean, we ended up slightly below where it was. And again, easy play off that ABM setup there going into the multiples. And it came right up to the resistance of the 121.90 range and retraced dramatically from there because, again, we're not seeing any inflationary pressure from tightening labor or anything like that, and that's just an indication. I mean, fine, yes, I hear you when they talk about the unemployment rate, but everyone knows that really is not the true factor of how many available workers there are to fill in any demand. And if we look at the current ES action, yeah, we came up nice buys. I mean, all the signals were really good from this reset of the ABM, and came all the way up, and then we spiked and started right here as we broke the ABM gold up here. Let's see what the level of red was, right up there at the 24.34, and we've proceeded to move lower from there, and it's still in a continuation. Getting oversold. We're moving into, well, if we get down to that negative 25 range, then we'd be close. The key on any return is going to be the orange DOC here, moving down below. But I think first, when you get this kind of breakdown, once we dip below the 25, as I was mentioning here, on the DOC, any pop-ups are likely to fail. We've got the long algo there, 24.29, so within 4 points, it's likely to get rejected at that point. With the shakeout breaking down very significantly. So we're just seeing pretty much just a pullout of any new buy signals, more than active selling, because we're not seeing a rise in short interest here. So it's always a good indication to see that. It lets you know that this is just basically a supply. Now, if shorts start to activate, I think you'll see a significant retrace. So something worth owning. 10 points at this level isn't even enough to get, marginally excited, but it's a decent enough move when you're looking for intraday setups. But I wouldn't be surprised that any little pop looks like it's going to be swift, but it's going to fail fairly quick. So that's where we're at currently. As always, though, be putting charts up on the Skype chat. Trade well.